Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a 22-year monthly candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And I'm starting off with this one as a special edition report because of what I'm seeing in the market. I'll explain more as we go on, but this is a chart that's showing higher highs. And again, I'm just going to point this out to you right here. We have higher highs, but take a look down below. We have lower highs on the CCI. Now, that's known as a negative divergence. Now, in 1999, we saw the same thing happen. We saw higher highs back here on the price, and we saw the CCI dropping quite dramatically with lower highs. And 2 months before that high, I had called it exactly how it played out. And in the 3 years that followed, we dropped 40% in the Dow, and we did that in 3 years. Now, as we fast forward to 2007, I called that high as well. 2 months prior to the exact high of the market, we see the same divergence. You see that? The CCI down there showing lower highs as the price had gone higher. And in the year that followed, the Dow dropped 50%. Now, keep in mind, and this is for all the naysayers out there or those who still believe the markets are going to continue to just run with a bull market. Understand that prior to these highs back here in 2000 and in 2007, I was wrong each and every week right up until the point where I was right. Now, why am I telling you that? Because I think we're in a more serious condition now with the Dow, as we could pull back to that 20-period moving average. That's a 20-month moving average. That to the moving average is a 5,000-point drop, just back to the moving average, and we're being conservative with that. But from what I'm seeing in the silver market and the possible squeeze that can take place with the 8 big banks that are short, over 50% of the short interest is from these 8 major banks. As we come into the delivery month for the COMEX silver, there is a huge shortage in silver. And I'm showing you this only because I'm putting this out to our investors, because as a former commodity trader on the COMEX, I was a member for 10 years. We know exactly how the silver trades, and we also know how it can be manipulated. And as you see right here, this is one of the biggest cup and handle patterns I've seen in my career right there. And we are at a role reversal resistance where former support back here has now turned to resistance. And we're at the brink of a possible breakout here. Notice how the volume is building up. It's the opposite of what we're seeing in the Dow. We're seeing volumes drop at the highs. Here, we're seeing silver, the volumes are increasing as we're breaking out of that high. Now, if we do break out, we have a major resistance up here at around $50, and I'm forecasting that silver could easily get up to 50, and I'm even going so far to say that we can see $250 to $300 silver in our future. And I'm not exaggerating here. If you go to YouTube, and I'm going to reference this in as a link at the bottom of this video, you'll see in the description page there, I'm going to put a link that will direct you to Ed Steer. And the name of the video is Ed Steer, silver price is about to blow sky high. This was published on February 17th, so it's pretty fresh. It's 29 minutes long. It's one of the best videos I've seen with regard to describing what's happening on COMEX and the possible short squeeze. So keep that in mind. Very important that you at least pay attention to that, whether you trade silver or not. Now, before I get back to the rest of the markets, let me show you what else is happening. The Congressional Budget Office announced, and this comes from Business Insider, that in 2021, our national debt will surpass the GDP, and they're putting at 102% of U.S. GDP in that report. Now, that's pretty scary. Think of this as you have already maxed out your credit cards. You could barely make the minimum payment, and then your credit card company is offering you another line of credit so you can use that credit to pay off the first debt, right? And if you think that's bad, it gets worse. Today, Janet Yellen suggested another stimulus package. Now, from what I can see here, this is going to be the nail in the coffin for the U.S. economy and possibly the world economy. So hopefully now you can see why I'm so bearish on the markets. I'm bullish on silver. I'm not going to get into a Bitcoin conversation with you, but it's something I will be talking about eventually. But I think that the U.S. dollar is history. I think the U.S. economy is toast. And this could spark an economic disaster as we move forward. Again, read these articles, get the information that you need to make your own decisions. And then, of course, as I look at these other markets and I look at the QQQs, for instance, you look at the Qs on a monthly chart, it's gone straight up. Again, straight up. And if you look again, this is the month of February here. This is a special edition report. Remember, I'm going on the monthly charts here, and then next week we'll get right back into it. I still think we're going to go lower. Keep that in mind. Believe me, I see the positions that people are taking. They're still reaching for the stars here. But look at that volume. This is the month of February. We have 5 trading days left, and that volume is one of the lowest volumes we've had in years, and that is a sign of weakness. Again, look at the higher highs on the price on the Qs. Look at that. Lower highs, not even a little bit lower. That's much lower on the highs. That's a negative divergence. Now, if we look at the IWM, this is the Russell 2000, right? This is the small cap index. Look at that. It's gone straight up. I mean, realistically, with all that's going on in Washington and stimulus packages and the devaluing of the dollar and the World Bank's in trouble and the 8 big banks short silver and can't cover it, this is an incredible time in our history. And therefore, if you look at this possible pullback, this actually could be more devastating in a percentage than the Dow itself. So look, we're going straight up here. And if you look at this high compared to that high, and then again, look at this high on the CCI compared to this high, that is an even match. That's still considered a negative divergence because with much higher highs here on price, we should see a much higher high on the CCI, and we don't. Now, let's take a look at the spiders, SPY. Again, I'm looking at monthly charts here. Same exact thing. Going back in history, you can see in 2000, higher highs, lower highs right before the crash. Right here, right prior to 2007, we had higher highs, much lower highs on the CCI. And again, same thing, much higher highs for a prolonged period of time on the price action, and the CCI isn't going any higher. In fact, this month alone, if I look at that, we hit a higher high with a higher low on the monthly chart for February. Look at the CCI right there, still moving lower. So you really have to be careful. Now, finally, the VIX. This is a play that we put on with our members. If you're interested, I'll put some links below in the description page so you can know how to subscribe to our trade alert services. Very successful, very inexpensive, and we make that easy for everyone to understand. So here is the VIX. Now, obviously, this is an oscillating index, but as I zoom into the daily chart here, you can see that my forecast was higher for the VIX. We're starting to track higher. This was a longer term forecast, hence the reason why I'm not really focusing too much on the weekly. Next week we'll be caught up with all these weekly forecasts, but I still have a target on the VIX up here around 29 up to 30, and the gaps will most likely fill on the upside here. And if the VIX goes up, what will that mean for the S&P? Well, for the most part, they're inversely related, so we're looking for a down market in the near future. Again, keep an eye on the silver market. Keep an eye on the news that's coming out of COMEX, because next Wednesday we're coming up to the delivery of the spot month. And it looks as though that COMEX is in trouble and even at risk of default. I know I'm probably one of the few people that's even going to say that, but I was a member of COMEX for 10 years. I was the chairman of the Option Floor Trade Committee. So that's my wheelhouse over there, and I'm talking to a lot of the members and some of the former board members, and it is a very serious situation right now with the banks being so leveraged. Usually, if you look at how most of the markets break down, it usually starts with some type of a derivative blow up, right? If you look at some of the biggest catastrophes in the financial markets, it always involved a derivative somewhere. Well, here we are. Silver is a derivative on the futures exchange. And then they have options on those futures. I'm not going to get into that level, but it's layer upon layer of disaster just lining up. And I think these short sellers are about to pay the piper. So be very careful. Keep your eye on the downside. Use your stops. And this special edition is focusing on risk management. Just for the record, this is February 19th. I wish you a good weekend. So long.